Hello and welcome to our latest market alert. Today I want to start off with the Euro Turkish Lira, and you can see the market's rallied higher once more today as we've got some more weakness out of Turkey. There's reports earlier that the Turkish Deputy Bank Governor is set to resign, and this has seen the Turkish Lira come under more pressure, and we've seen the Euro Turkish Lira rally back up to this 8 level and retest those previous all-time highs. Now we could have a possible double top forming here around 8, and this is a potential area to look for resistance. But if the market does bust up through here, then it could be set for another strong push to the upside. It's not just the Turkish lira, it's come under pressure today. We've also seen several emerging market currencies, and just in the past hour or so we've heard that Argentina have hiked their base rate by 15% to now stand at an incredible 60%. You can see these sort of moves if you look at the heat map here on the market analysis tab, and you can see we've got typical safe haven flows. You can see some of the best performing currencies, the US dollar here, which is higher against all these crosses, also the Swiss franc, which is higher against all currencies apart from the US dollar, and also the Japanese yen. If we look on the left hand side and see what the biggest losers, Turkish lira down by 4.5% against US dollar, also South African rand, Chilean peso, Mexican peso. So you can see there's a lot of weakness here in the emerging market space. Turning our attention to another Turkish lira chart, if we look at USD TRY, you can see the market here after we had that strong move high at the start of the month. It had been pulling back down lower, but if we take a fib from the all-time high of 711, run it down to these lows here around 568, you can see we are taking out several of these fib levels in recent trade. Really, after it broke through the 38.2 around 623, the market has been a steady grind higher. You can see today we've actually tagged the 78.6 at 6.81. If we do move above here, then we could be set for another retest of these record highs around 711. Looking at the South African rand, you can see we had similar price action earlier this month when we got the Turkish lira weakening and those Turkish lira crosses rallying. You can see here we've got USD ZAR, which made a strong move higher, and since then it has been a period of consolidation. But similar to a Turkish lira, whilst it's not dropping as much, the rand, we are coming back under pressure, and USD ZAR has popped higher once more in recent trade. This is a 4-hourly chart. You can see we took out the 38.2 earlier today at 14.52, and we're now back at that 50% level around 14.70. Now, if this emerging market moves continue and we do get more broader concerns, we could also see this starting to come up in indices. So if we look at the DE30 here, just show you for an example, earlier this month when we had that 20% spike lower in the lira with USD TRY hit those record highs, we had quite a big down move in the DE30 cash, the German benchmark. You can see the market dropped around 250 points on the day, and after a couple of days of consolidation after the weekend, we had another large down day where it found support at the previous lows around 12.110. Since then we have recovered, but today we now sit at a potentially key level where we've retested these highs, which has acted previously as resistance around 12.585 and the lows around 12.412. I think these are two important areas potentially to keep an eye on, and if we do see a move either higher from here, then we could see a further recovery and more upside, but if we do drop below 12.412, then we could be set to retest these lows. Also, I've got two EMAs drawn on here, the 8-period EMA, this blue line, and the 21-period EMA, the yellow line. You can see these are converging once more. This could mean the market is on the verge of printing a bullish cross if the 8 moves above the 21, and if this happens and price moves back above 12.585, then the outlook would become more favourable for the upside in this market. Last but not least, I want to speak about the JAP 225, the Nikkei, and you can see we're at a very potentially key level once more here around the 23,000 mark. Going all the way back to the back end of last year, you can see this acted as resistance where we had a strong gap and a push up through this level. The market ran around 1,000 points up above 24,000 before coming back down lower. We made the low earlier this year in March, I believe, and since then we have had a series of higher lows, but we have run into resistance once more around 23,000. You can see just a couple of days ago we looked like we could be set to push up through this level, but we had a big red candle yesterday, an inside bar, and we could be set here to get a bearish engulfing candle. If we do get this signal here, this could be seen as negative, and the price could fall back down lower to around the low 22,000s to retest this rising trend line. Okay, thanks for listening, and best of luck if you're trading these markets going forward.